So there is hopefully one more energy or one more attention span of an hour so that we can discuss the same topic we had last year as well. Same, but different. Crypto exchanges. And not only crypto exchanges, because we have Nasdaq here as well. And so much happened since the last Crypto Valley conference in terms of exchanges, a lot of turbulent events. So we are going to discuss now what changed and how can we focus and build a better infrastructure. How can we build back better, basically. Please introduce yourself and tell us a few sentences about your company.
My name is Olga Feldmeier. I'm board chairman and co-founder of Smart Valor. Yes, there are still co-founders at work. I don't know if it's a good sign. So I run Smart Valor as a board chairman, and Smart Valor is a digital asset exchange, the only European listed on Nasdaq. I just stop there and pass to Alastair.
Thank you.
I'm Alastair McAlpine. I'm basically based in Stockholm. I'm British, but I have 2 passports, so that's nice. And I represent the Nasdaq market technology team in Europe. So I do sales and account management for all of our customers from pre-trade, trade, post-trade, settlement, risk management, surveillance.
Thank you very much.
Thank you.
Samia?
Hi, everyone. I'm Samia Bayou. I'm the head of OTC lending at Kraken, covering mainly the EMEA region. Kraken is one of the largest, most trustworthy exchanges, and one of the oldest as well, US exchange, and where you trade spot market and many other products. Thank you.
Thanks so much.
Yeah, Will Harvey, based in London. I'm part of the institutional business development and sales team. Joined the company 2.5 years ago. Always been exchanges in previous life, where I was at CME Group, both in London and Hong Kong. So Bullish Exchange is a regulated centralized exchange that combines a traditional central limit order book and an automated market maker in our order book to provide liquidity. We also have underlying liquidity pools where users can become a liquidity provider and add liquidity via automated market maker for yield.
Merci. Last but not least, Patrick.
Yeah, hi everyone. My name is Patrick. I'm leading the business development team at Bittrex Global. I'm based in Zurich. Bittrex Global was as well one of the old OG exchanges. We are focusing on spot trading.
Thanks so much. So I think the next question goes to Samia, Olga, and Patrick, if you would like to chime in. Do we need 200, 300, 500 of exchanges who do it all, or we need exchanges that are specialized in derivatives or in options, or what is your take here? And what are you trying to become the best in?
Well, I think even the concept of exchange, that's a bit misleading, right? Because in a lot of cases, like if you look at what Smart Valor is doing, we are a technology platform, right? And within this technology platforms, there's like retail business, and exchange is kind of the word. It's investment platform, right? People of different types come and just buy or they trade, right? But we are also, the platform business in the way that we specifically provide white label technology for investment in digital assets to fintech and banks, right? So we integrate on the back end with traditional or fintech companies and enable their customers to invest in digital assets. And that's what we're trying to become. Basically, not just give it to the banks who are like super resource rich and can pay 100 million for another product shelf extension, but also give it to fintech, to neo-broker, to neo-trading platforms, right? And we do it in a super cheap way. It doesn't cost anything. We integrate in 2 weeks, and their customers can trade.
Can you share a few reference clients? You work together with Dukascopy, for instance.
Yeah, exactly. It's a good example, Emmy. It's a Swiss bank, and why it's a big deal? Because the bank is FINMA regulated, and I think you guys all know what this means, right? And what we've done with Duca's copy, we integrated our systems through API on the back end. That means that when the customer of the bank looks at their assets, they see their fiat on the bank account, they see the stable coins and crypto that they hold on Smart Valor. So that's integrated view, and this is how I think the crypto assets will find the way into the traditional finance.
Thanks so much, Samia.
So at Kraken, security is at the forefront. It really is our number one because it's so important for clients to trust us. Since 2011, we've never been hacked. I think really something that we're really pushing that. We have some of the largest cybersecurity teams in the world globally, making sure the clients' assets are safe 24/7. And also the most important thing for us is also to provide seamless service in terms of trading, liquidity, fast, efficient, cheaper as well, not much slipperage. So this is more of the forefront. And also when we look at that, we then see the appetite from institutional clients. So we have offered derivatives on the OTC desk, for example, and where we offer liquidity on that front as well.
So much, Patrick.
Yes, as well for us. I mean, security is a top priority for us. We have never been hacked either since 2014, since we exist. So, knock on wood. I don't have any wood, but yeah, let's hope it stays that way. We invest a lot in InfoSec as well. Very important for us is regulation. We are regulated in Liechtenstein, very close to here, and as well in Bermuda, where we have proper regulatory clarity, what you actually can do as a crypto exchange and what you can't. So what we can do is actually spot trading. That's what we offer to our customer in a safe and secure way. I think it was back to your point, Emmy, about where should you focus. I think in the last couple of years, what you saw is every crypto exchange tried to be a one-stop shop. They wanted to have it all. We didn't do that. We really focused on spot. I think we have around 650 markets that are available for customers. And yeah, we just try to keep it simple, safe, and secure.
Simple, safe, secure.
Yeah.
I love the alliteration here, and looking forward to the invite to your 10 years anniversary party in a year. I have two questions, or two asks to the audience. Please think of a question, what you would like to address to the panel here, and please be mindful and help us not bang the door when you leave, because it's really disturbing. That would be very kind. Thank you. So, the next question goes to you, Alastair. Nasdaq has been around for over 50 years. Mm-hmm. You are primarily a tech company, providing quite some crypto exchanges. We can mention maybe a few. And curious here to understand that what is your digital asset offering today? And primarily, why do institutions come to Nasdaq?
Yeah, I mean, it's a good point. I mean, Nasdaq is a technology company, right? I mean, we have been around since 1971 in terms of offering the electronic trading. I mean, that's what Nasdaq stands for, North American Securities Dealers Automated Quoting. So even some of my colleagues didn't know that. But I mean, we built the company based on sort of three pillars, right? It's liquidity, it's transparency, and it's integrity. That's how we structure the organization, that's how we deliver it. So by liquidity, what I mean is we run markets in North America, in the Nordics, but we also supply technology to other exchanges, so 130 customers worldwide. In terms of transparency, this is basically about connecting the investors with the corporates. So it's all of the market data, it's the ESG, it's indices, it's data. And then the third part really is the integrity. So we basically have a very large anti-financial crime business, which provides surveillance solutions to about 2,500 banks. And we also offer AML and basically anti-financial crime. I mean, it's a $4 trillion issue that the financial services have to deal with. It's not just crypto, right? So in terms of digital assets, that's part of our kind of expanding our offering within the markets. So this is a relatively new announcement from our side. But fundamentally, the goal of the digital assets business is to advance broader institutional adoption of digital assets. And there's at the moment we're basically pending regulatory approval, but the solution is a proprietary custody solution regulated by NYDFS in New York, and it's basically going to provide liquidity and executions for institutions. So I think that's kind of, it's custody, it's liquidity, but it's integrity as well. So all of the tech that we sell to our customers, it's the same tech that we're going to be running on this platform. And our goal is to basically have best-in-class custody with hot and cold wallets.
Best-in-class custody. I think that's something what we all aim for, and they are curious to learn more about that offering once it's implemented. If it's HSM-based, are you going to primarily cater to your existing clients already who don't have yet exposure in the digital asset space? I think now it's a good time to take a question from the audience, and then to shake things a bit up. Who closed the door gently and has a question?
We take those first.
What's your view on what exchanges should offer? Meaning, should they be just an exchange, or should there be multiple services involved? I guess questions for anyone or multiple.
I will repeat the question. I feel like this touched base a bit on my first question. So you're asking that an exchange should be only an exchange, or should offer other services as well. So we actually, what comes to mind is for instance the example of CEFU, right? Like Binance has a certified custody arm, as in a regulated custody arm. But who in the panel has a strong take on this and wants to take it?
I think it's good to start with a customer. What does a customer needs, right? They just want to invest. And now we have the strange situations that we have, like here's crypto, and here's the stocks and bonds, and it's actually shit, right? It's super shitty experience because I, as a customer, now need several accounts, right? I just want to invest in tech companies, right? And this is what we're seeing, this is where kind of like crypto will merge with traditional finance, that, neo-broker and trading platforms adopt digital assets, right? Revolut, eToro, you can trade digital assets, right? Robinhood. And this is obviously, for us, the path forward, we're going to merge, and that's going to be one space.
Thanks for the question. We will take more. And the next one is addressed to Will from me. Bullish has been around nearly 2 years now. Your trading volume is over 200 billion. You are a bit different than other exchanges in terms of you're not working with traditional market makers. However, you have your internally built AMM. Can you tell us more?
Yeah, thanks for the question. So the title of the panel really fits Bullish very well, same, but different. So we have a lot of the traditional features of a regulated institutional focused exchange, KYC, AML best practices, low latency connectivity, API connectivity, a high throughput matching engine. The way in which we think about our technology and providing liquidity differs from a lot of traditional centralized exchanges. So as mentioned, we have our own in-house automated market maker. So we have taken the liquidity pool technology and AMM technology off-chain and in a centralized venue. So users, institutional users, as that's who we focus on, when they onboard to the exchange, they can trade post-traditional central limit orders, or they can also become a liquidity provider. So that would be, they go into the desired market, let's say Bitcoin, dollar, they would choose the range in which they want to provide liquidity, choose the spread, and then the AMM uses a constant product algorithm to post bids and offers based on that spread. Now the AMM only updates its price when it's traded against, so there's no external oracle or pricing reference, so it's a unique source of liquidity and independent price discovery. And then those LPs, they get part of the trading fees, so it's a yield aspect as well. And that's all built within the central limit order book. So we have some of the similar features, but we kind of think about things a little bit differently.
So what percentage of your clients use the AMM? versus?
The vast majority, I would say over 95% of the volume is taker volume against the AMM. So the AMM is very liquid, very tight spreads. Our fees are 1 bit taker and 0 maker, so we're open for people to post traditional market making orders in the central limit order book. However, the AMM is our in-house market maker, so we don't build incentives like you would on traditional centralized exchange with like rebates or monthly incentives. Yeah, it's one set of fees for everyone.
Super. By the way, dear panelists, if you have a question or two to each other, I'm very much up for if you would like to address a question to one or the other, we can do that. Otherwise, I will address the next one to Olga, Patrick, and Will. And since the last CVC, we did talk about this today in another panel that so much change happened, and that's why I love this industry, because change is constant, and we have to build back better. We have to gain back the trust. How do we do this? Where is your focus as the board chairwoman of Smart Valor and the other colleagues? How do you see this?
Yeah, well, you know, guys, our timing was absolutely lucky because we did something really crazy. We decided that we will become a Nasdaq-listed company in 2021. The reason we decided that, because we kind of like thought, look, there are so many gray exchanges offshore, you don't even know who runs them, and people put millions of dollars there, and it seems to bother nobody that they can disappear tomorrow. And we said, this cannot be the future. So let's go, we're already regulated. We've been the first exchange here on the ground, been regulated in Liechtenstein and in Switzerland. In 2018, 19. So we said, how can we improve the trust even further? How about if we submit ourselves voluntarily to the strict guidelines and rule book of Nasdaq? Quarterly financial statements for half a year, audited financial statements, independent board, transparency, market abuse regulation. All of this, there are like, guidelines and requirements very long. And we're going to do this. We're going to execute that. It's going to cost a lot of money, a lot of work, but we're going to show to the market how crypto exchanges can be run. And we've done it. It was super difficult, almost impossible, but we've done it. And we've done it in February 2022. We had our IPO on Nasdaq First North. And then half a year later, FTX happened. Boom, right? And I think this was like a pivotal moment for us to show, no, not crypto, all crypto is gray. Not everybody is just like, taking customers away. There are companies that, go to very big mile and depths to provide to investors and customers full transparency, trust, and security. That's our answer.
Thanks so much. So not 2031, but so much earlier. Great.
True.
Patrick, Will, who wants to share his focus?
Yeah, well, I can jump in here. I mean, I was here last year as well on a panel with Emmy, and I remember right after it, I went to Texas to another conference, and that's when Celsius happened. So yeah, we definitely had a roller coaster in 2022. Got a little bit more gray hairs as well.
Amazing memes were made, you remember?
Yeah. The meme factory went crazy too. Yeah, I mean, like, what happened since then? I mean, especially, I think during 2022, there was still quite a lot of activity as well from institutionals. Liquidity was still there, and I think really the knife in the back for crypto came with FTX. Since then, trust is lost, I would say. If you look at the seven-day moving average of volume, it's at around, 10 billion or so. it's a third of what it was in 2022. So yeah, there definitely was all these events led to a bear market that didn't really needed to happen, I would say. But it as well put, some pressure on regulators, which I think is a good thing. So they take it more seriously now. They trying to get regulation through and putting them into place. And as well, I think the whole crypto infrastructure is going to mature. We were talking about, an exchange is a custodian at the same time. I think we're probably going to see that going more to the traditional way. I mean, I was in TradFi before crypto, and when I started in crypto, I was like, how is it possible that an exchange can be a custodian and an exchange at the same time, right? I think we are moving into the right direction. Sometimes, like every market, every immature market has to go through such phases. I think it was a pretty bad one. I agree, and a lot of people lost their monies, their life savings. But sometimes that happens in the early stages, and what comes out of it, hopefully, is going to be better for the future for all of us.
Yeah, we fail big in the earlier days, and then then we will not fail big anymore, hopefully.
Yeah, I mean, so we've always been institutional focused and building a compliant, transparent exchange that fits an institution's best needs. Post FTX, what we definitely saw from clients was an influx of exchange due diligence questionnaires. So really trying to understand the counterparty risk of an institutional client parking assets on your exchange, which is obviously a big risk post FTX. So the ability for the exchange to provide your risk policies, your KYC, AML, your cybersecurity, how you custody assets, it's important to be able to share those to make institutional clients feel comfortable. And then as we build exchanges, we're getting more TradFi firms coming into the space. You need to build institutional features, whether that's fix, API, low latency, connectivity, deferred settlement, credit lines, perpetual contracts, which are more capital efficient. But you just have to look to cater to these institutions much more now than you did in the past.
Thanks so much, Will. Who has a question? Andy, please. Ladies and gents, this is Andy from Weiden. I will hand you the mic.
Thank you, Amy. According to CoinMarketCap, there are about 650 exchanges right now, crypto exchanges. There's one huge elephant in the room. It's Binance. They're 10 times bigger than everybody else. How safe is Binance at the moment? You have a view on that, and what would happen if something happened to Binance like it did to FTX? So if the this cluster risk that we have with Binance turns into a clusterfuck.
Well, Andy is scaring out the animal from the bush, or I don't know what is the saying here. Who wants to respond to this one?
I don't want to comment on Binance and how safe it is, but it would definitely be negative for the industry and liquidity if the same thing happened to Binance as it did to FTX. I don't think any of us wish for that. Yes, we wish for liquidity to be spread across not loads of exchanges, but maybe shared more equally. But yeah, it would definitely be negative.
Any other takes, or we can take another question from the audience. Guido, you need to shout. I can't throw you the mic.
Well, Guido, like 5 years ago, I was some consensus, like, let's create union, you know, of exchanges. Let's put the rules. Let's do it, guys. Anybody? It's just not happening. But we don't need that. We don't need that. There are guys like Nasdaq. They have rules. Just go, list there. It's not expensive. Just comply with the rule book, you know? Like, it's all out there. We don't need to reinvent the wheel. Just nobody wants it. That's the simple answer.
Any other take, or can I go on with my... Shantanu, I think I can pass the mic to you.
Hi, thanks. I'm Shantanu Surpre. I'm a corporate lawyer based in the U.S. So clearly, the U.S., as we know, has taken a very aggressive stance against this space in some ways. We've seen some of the exchanges at Kraken, Coinbase, some of them sort of saying that they're going to set up abroad and maybe target non-U.S. customers. The problem is from the U.S. customer base, and Bittrex, I think, recently went bankrupt after being sued by the SEC. So the number of U.S. exchanges focused on U.S. customers is shrinking, yet there is still an audience out there. It's not good for the U.S. customer to have fewer exchanges. So what happens to this space? Do we just have sort of two industries? We have a non-U.S. industry and we have a shrinking U.S. industry? And what happens?
What happens?
I think we just keep expanding. It's not something, you know, black or white. We keep the dialogue with the regulators, with the SEC, US, outside the US, because we need to cater for all clients globally as much as we can. Even though we're a US company, we're definitely global because it's borderless for us. You know, whether it's complicated or not, the key here is transparency, where it's all about communication and keeping the dialogue. That's key for us. We can't really predict what's going to happen, but what we can do is just listening to clients, what the need is, the appetite, and this is how we create products. It's not by creating products on the other side. It's the client's appetite. And then when we're looking at that, then we discuss it with the regulators and see where it fits and how we can do it safe environment for clients.
Super. I have a question to each of you. Let's make it like a quick one. So from left to right, what is the main revenue driver of your exchange, if you would like to share volumes, or what's the most popular product? Olga.
Which side? Well, you know, as I said, we have two businesses. We have retail business, you know, which is just for retail users, mostly here in Switzerland and in Germany. That's just trade-in fees, right? And unfortunately, trade-in volumes are down, revenues are down. That's not going to be an amazing year, I'm afraid. But on the other side, you know, we have this B2B business with banks, and you know, there are interesting cases coming up. I used to joke, do you guys know what is the biggest Bitcoin ATM network in the world? Anybody? In which country could it be? And how big it is? Any ideas? Well, you know, it's kind of like a funny story. Do you guys know that here in Switzerland you can buy Bitcoin at the SBB, at the National Railway ticket machines? You know that? Anybody knows that? You can buy Bitcoin where you buy the ticket, right? You get the paper wallet printed out. Yeah, so Smart Valor, together with partners, we power this ATM network, right? How amazing is that? In which country you have 1,500 machines selling Bitcoin at every train station?
But that's not your main revenue driver.
No, but what I'm saying is B2B is going to lead the way, right? Because there are 10,000 financial institutions and fintechs in Europe. 10,000. If you say 10% of them is going to adopt digital assets in this way or another, in the next 2-3 years, we're talking about thousands of customers, right? And this is, I think, the way for our industry to grow, and for us personally, a strategy we focus on.
Super, thank you. Alastair?
Yeah, that's why I have my piece of paper, because I was trying to say, how can I quickly give you some numbers
Please,
for Nasdaq?
give us all the data.
Yeah, I mean, look, everyone's familiar with Nasdaq. It's the deepest pool of liquidity for technology-listed companies in the world. We have phenomenal data products. I mean, from the top down, we have $3.5 billion in revenues, of which 2 million are what we call ARR, annual recurring revenues. Within the division that I take care of, we have 130 customers worldwide that use our technology, so regulators, clearinghouses, banks, you name it. I mean, we're spread out across 50 countries, but we have to handle huge amounts of data at the exchange. And just to kind of give you an idea, pre-pandemic, we were processing about 30 billion messages daily, and by the end of the pandemic, that had got to 85 billion. Just messages daily. So, but we have to plan for the future. So we're looking at volumes which are going to hit 180, 200 billion messages a day. So obviously, what's key for us is we need to use cloud, and cloud is a journey that we've been on for almost a decade, and that's the key driver where we're going forward. So you may have caught that we recently moved one of our markets into the cloud in North America, MRX. So that was driving a partnership with Amazon, using their latest Outpost technology so that we can essentially use very fast on-prem equipment, but offering hybrid connectivity solutions using extensibility through the Amazon cloud. So, I mean, fundamentally for us, in the long term, cloud and data, and then ultimately AI will basically become the critical enabling factors for us, and that's essentially where we see the growth. But in the meantime, we've got to build stuff that's scalable. It's got to be resilient. It's got to be accessible, and that's where the cloud kind of comes in, because it takes things away from just one point location and makes it globally available. But at the same time, we're laser focused on capacity and performance.
Capacity and performance. I like that. Samia?
So I'll try to be quick, and it's... Oops. We're actually the lead crypto liquidity providers for Euro pairs in Europe. And we, for the trading volume, in 2022, we ended with 250 billion trading volume. That's obviously a bit low compared to the year before, but we're in line with that for this year. And we have over 10 million clients. The main product for us is really spot trading, which we keep on, working on expanding and really progressing on that. For example, in Q1, we did a bunch of updates, and we've actually reduced 75% of slippage as well for the liquidity and the trading, which has been great for clients, because having something fast and reliable is key for us for clients.
Thanks so much.
Yeah, I mean, for us, it's spot trading volume. So ADV this year is 470 million in our spot pairs.
For those who don't know what ADV is?
Sorry, average daily volume. And we are the third biggest Bitcoin volume exchange for spots in the world. And as we look to the future, we are looking at the moment we're just spot, but like things like margin, perpetual contracts, options. And then the exciting thing about AMM technology and liquidity pools is you can work with any assets as the two pairs in that. And the AMMs are able to use that algorithm to provide liquidity in a number of different markets. So yeah, that's what we're looking at.
Super. Sounds great. Patrick?
Yeah, it looks like we have like a spot exchange round table here. We are as well focusing on spot, as I already said. It's probably as well it is our biggest revenue driver. We have different business lines as well. We have lending, and we have OTC. We are going to have derivatives very soon. Staking, obviously, as well, another revenue.
Is that you're working together with some of the staking infrastructure providers, or how is staking? How Bittrex Global is thinking about
so
staking?
I would say it's probably half-half. We as well have our own nodes where we run our own staking. But yeah, we as well have third-party vendors that we work with.
Super. As next, I have a more personal question to you, Samia. And you really built a career in private banking and family office. How do you find working in crypto versus these days? What is really appealing to you in our industry?
I mean, it's really night and day. I kind of lived both, obviously, the crisis 2009 and also the crisis last year. But in terms of what the preference of what I have noticed, it's really being at crypto. It's efficiency, fast-paced, creativity. The progress is there. Having been on the buy side and the sell side in private banks, you can see that it's stagnating, less facing the client's needs as well. Opening an account can take 2 months, changing paperwork because the client filled in black ink and then he signed in blue ink, everything gets canceled. So a lot of things to be changed there. And also the clients, they really appreciate the services 24/7. And so speed is very important for them. I've had a lot of clients, ultra high net worth family offices telling me, why can't Kraken add stocks and can we do other products and make it into? So, it's, I think the service is key. And also the fact that it's borderless and decentralized was very appealing for me, having covered the Middle Eastern clients in my career, seeing what happened in Lebanon and Egypt, the Arab Spring and default of Lebanon, and having clients, losing their assets in the banks. That's a major wake-up call for these clients who are all now putting their a part of their asset allocation in crypto, and it's very much valued.
Thanks so much for sharing your take and your experience. Alastair, you guys announced last year in September your digital asset offering. Mm-hmm. What's next? What's on the roadmap? What you can share with us?
Yeah, I mean, it's pretty exciting things. I mean, I think if you've got to look at it from, I mean, people would say we are TradFi. My headshot probably shows more of that, but the person who was responsible for hiring the person who hired the person to take the headshot has been fired and wants to fight himself, which was me. But I think, like, from a digital assets point of view, I mean, there's two things. Like, we've got a mission and a goal, right? So the mission is long-term, sustainable, scalable, institutional adoption of digital assets, right? I'm not going to say crypto. It's about institutional grade solutions with end-to-end trust, reliability, scalability, right? So again, back to how we're structured in terms of we provide liquidity, we provide integrity, we provide transparency to markets. So the goal really is we want to solve the technology pain points using trusted and resilient infrastructure. And we feel that Nasdaq has a natural place in this environment as we grow. So, in terms of driving the digital assets agenda going forward, one key area, for example, to give you an example, is carbon removal, right? We have made a majority investment in a company called Pura.earth, and they have a registry that can basically demonstrate that this amount of CO2 has been removed from the atmosphere, and obviously those carbon credits can be traded in the secondary market. What we're doing is using DLT as a common registry, using standard protocols, and it's all about sustainable goals. It's about helping companies reduce their carbon footprint, and this is the type of adoption that we see going forward: is broader application of technology, not just cryptocurrencies.
Thank you so much for sharing. Good taste in glasses, by the way.
Thank you.
The next question is to Olga and Patrick, and we can't leave this panel without talking about Mika. Last week, someone from the US actually corrected me. I was saying Micah all the time, and it's like, I think it's pronounced Mika, and I think it's right.
Yeah, it is.
Especially if someone from the US corrects you. So what is your take? I mean, is it really such a breakthrough milestone for us here in Europe that we will have Mika? Or how do you see this, Olga? I'm sure you have a strong opinion on this.
It's amazing. It's a dream come true, right? I've been waiting for this. Like, I'm in crypto for 10 years now. Hard to believe. but the last 5 years, I was waiting for MiCA. Now it's here. And I tell you why. There are 2 reasons. First of all, look, today we are regulated in Liechtenstein, right? And with my beautiful colleague Zoe here, we were trying to run like campaigns, you know, Google campaigns, this or that. We cannot do it. We cannot, you know, even switch the Google ads for Germany, right? We cannot do anything because we are regulated in one country. Now, with one legislation, we are open to 500 million consumers in 30 countries. Guys, like, I mean, what else? Like, how much better does it get, right? So that's, you know, this pan-European regulation. And this is, I think, where we can be very proud of what we achieved, right? Looking at the shit show and, you know, this choke point too, what's going on in US. Guys, here in Europe, let's just acknowledge this for a moment. Let's be proud of what we achieved as an industry and what our politicians achieved for us, right? Now we are leading the way. Once in history, very unique moment. Let's enjoy it. And the reason, too, I'm really excited about it is also, you know, how digital assets are regulated, right? So there is a new category, this, you know, crypto assets, and it legalizes what we do, right? So yes, it's not security, but it's not just some token. It's a way to participate in a company, right? And it's, you know, it's now very clear what it is, right? And we have a right to offer these assets and trade. And there is no still questions, oh, maybe we are all criminals because we are trading securities. So this clarity is a big breakthrough. And for example, for us, that means, like, look, we were always like super regulation and everything by the rule. So we only listed blue chips, right? If you look at Smart Valor, we have only big tokens. Why? Because we were afraid of getting into other assets, which, you know, might be securities or whatever. Now, with this regulatory clarity, yes, we're moving forward. We're going to offer new segment, new listings in Q3. We're going to open this product segment and product service. So it's amazing. Like, I'm so happy it's finally happening.
I love your optimism, especially that, you know, it will be 2024, maybe it will be delayed, maybe it has a few surprises to it, but we will see. We will see. Patrick?
Yeah, it's definitely a good thing to have clarity on regulation. I think the other question from the audience was about the US. What is the SEC doing? In the US, you clearly have a lack of transparency and clarity on regulation. And I think the European Union is trying to solve that by MiCA. And as well for an exchange, right? It was, for the last couple of years, it was kind of a scavenger hunt because you had to find a regime which has a proper framework that you can work with, where you can get regulated. I remember we started out in the US, and then when we separated the business, we started with a license in Malta, then we moved to Liechtenstein. We as well have now a license in Bermuda, so-called DABA license. So you always have to have like kind of a hedge, right? So to basically diversify the risk you have against a government and the legislation. So with MiCA, you basically get the regulation for Europe, which is clear for everyone, which is going to be amazing. So we are in Liechtenstein. The good thing for us is much of what is coming in MiCA is already available in the Blockchain Act in Liechtenstein. So we were basically for the last almost 4 years, we have been compliant with what MiCA is going to come. So for us operationally, it's going to be an easy lift to actually comply with MiCA. Obviously, some smaller tweaks that we have to do as well. But yeah, it's definitely a huge achievement. I think other regions are going to follow soon and really look at crypto as a new asset class rather than putting crypto into an already existing one.
Super. I love that you're also optimistic about this. So, who will win when we look at traditional players like Nasdaq, who built a legacy and comes into crypto and has a strong offering? Or we have, of course, the crypto native exchanges. Where is the market, or how will this shape out? Who wins? Vil, this is a question you brought up.
Yeah, so I mean, I think there's space for both, but I think the crypto native exchanges will win for the trading of the underlying asset. There's a number of good traditional exchanges that have futures products, for example, and they are a great form of price discovery and a great exposure to the price of Bitcoin. However, at the end of the day, you are still buying or trading a cash-settled index with no underlying exposure to the asset class or technology, whereas crypto-native exchanges have really built to it. So whether that's custodying the asset, staking, having liquidity pools, AMM technology, they're really embracing it, whereas I feel like traditional exchanges are really focused on their traditional infrastructure.
Thanks. Do you agree, Alastair?
No, I agree. I mean, you grew incredibly fast, right, in the last 2 years. And I think that's testament to a number of things. I think it's testament to how fast the industry is moving. I think it's testament to how accessible and available technology is. I mean, in some senses, the pandemic meant that you could tap global resources and very talented people very quickly. The way everything's moving in terms of Web3, DeFi, there's a phenomenal amount of innovation that's taking place in that space. But, it's not for me to comment who I think will be successful or not, because, ultimately, Nasdaq's view is we want to be a trusted financial systems and services provider. So actually, we're happy to sell matching engines to you. We're happy to sell market surveillance systems to people, because ultimately, the technology that we built is built on those 3 pillars, right? It's based on very high performance. It's built on a pedigree of 30 years of building systems. But we have 130 customers worldwide who use our technology. So in terms of crypto and traditional finance, I think your point is correct. I mean, there are certain behemoths in the world that have adapted and chosen very specific niches and done incredibly well. But in the long run, there will be a gradual, and I'm stealing from your last question, but there will be a kind of a gradual, not consolidation, but the digital and the traditional worlds will eventually start to come closer and closer together. But the only way that that's going to happen is by having reputable marketplaces with the right kind of regulation, and to allow the traditional financial market infrastructure to come along with that. So, I mean, I was at a conference last week in Prague where we had it was more for CSD, so Central Securities Depository, and I was pleasantly surprised at actually how much discussion there was on blockchain. I mean, they have different names for it. It's either digitization or DLT or blockchain. It's not necessarily about the native underlying protocols, the cryptocurrencies, but there's an absolute recognition of the fact that markets will move to shorter settlement times. They will move to longer trading windows. There will be more interoperability and better standards, but that's where regulation is key, right?
And the best proof is we are already sitting at the same stage. Like, look, crypto guys and Nasdaq guys. 5 years ago, this would be unimaginable, right?
It's gorgeous. There is one last question between you and your Toblerone, and a real quick one for everyone. So there is a trend that there are more and more crypto exchanges. Will there be a consolidation in the market, or what is the future of crypto exchanges?
I think diversification is key for clients. So there could be consolidation, because if the clients are, making their choices and going where it suits them best. But I think the way it evolves is that it's the exchange that would put trust and security at the forefront. They would get more of that consolidation because of the trust from the clients.
I think as well, from an institutional angle, generally liquidity is king in a lot of forms. So there's a lot of crypto exchanges. However, there's very few that have decent liquidity or a unique source of liquidity. And a lot of the institutions, I think, will move to there, especially if it's a regulated exchange.
Yeah, I mean, look at the traditional exchange industry, right? I mean, you go back 10, 15 years, you had Life, you had NYSE, you had there is a natural consolidation of markets because of the assets that are traded there, what the participants want, and I think that's healthy.
But also because of adoption, right? Because all of these guys, like, think about it, guys, CBDCs, national currencies will be tokenized. Every bank will need a technology to be able to transact, right? They can either build it themselves, or they can, take your technology or buy companies, right? And think about how much money it cost six Swiss stock exchange to build their stuff, like 150 million. How much it cost a company like Smart Valor to build this stuff. We're just more efficient, we like clean, we work hard, and we are faster and cheaper to build it. So of course for them, like buy or build, there will be a lot of acquisitions.
I think it's not necessarily only on which one is more expensive to build. I think if you look at a traditional exchange, they have to follow all the procedures, right? And the barrier of entry into crypto just to create an exchange is very low, because so far a lot of these exchanges, they didn't follow any protocol, they didn't do any SOC 2 type of certification, they didn't get like any license, anything, so the cost base was very low, right? So that's why you have so many exchanges these days. And I think with the shift in regulation and all that, what we are seeing now, you're obviously going to see a kind of a consolidation at some point.
Thank you so much. Dear audience, put your hands together for this phenomenal panel.
Indeed, thank you so much.